a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
It's been a while since we took a look at Japan ETFs, and so our ETF research director, Nina Mishra, is going to do that with us right now. Japanese stocks on the Japanese stock market have been not doing too badly lately.
This week, in fact, the broader Japanese index, Nikkei, surged almost 7%, though it is still down 15% for the year because of the disappointing performance in the first half. And one particular Japanese stock, Nintendo, is up almost 60% this year on anticipation of blockbuster profits from widely successful game Pokémon Go.
Yeah, I almost hit two people this morning who were out looking for this stuff.
Yeah, it's just crazy. And in fact, it is not very clear how these profits from this game, this augmented reality game, will be distributed and how much of those will go to Nintendo. But the stock is surging. But Nintendo and Pokémon had little to do with this massive turnaround in the broader Japanese stock market. And that was thanks mainly to this victory of Japanese Prime Minister Shinzo Abe's coalition in elections over this weekend. So he had a sweeping win, and with that win, he's now able to control both houses he has a majority control in both houses of Japanese parliament. And the yen, which had been surging this year thanks mainly to its safe haven status, has also slipped this week, almost 3%, down almost 3%, as market volatility has abated and the political drama in the UK has also eased with the election, or rather selection of the new prime minister there. And Japan is an export-oriented economy, and a weaker yen is good for companies over there.
Okay. So you have a couple of examples here of Japan ETFs, right?
Yes, but before that, I wanted to discuss why the surge with Abe's election.
Oh, okay. More on politics.
Yes. So as I mentioned that with this resounding victory, his coalition now has majority control in both houses of parliament. So it is expected that his party will be able to, the government will be able to push Abenomics agenda further. Abenomics was launched almost 3 years back, and it was seen as a success initially, as stocks surged after the launch, thanks mainly to this massive monetary and fiscal stimulus, which were the first two arrows of Abenomics. But after some time, stocks have been struggling because this policy could not do much for the economy. It could not boost the economy because problems within Japanese economy were much deeper. And they required some critical reforms, which was supposed to be the third arrow of Abenomics, structural reforms. But nothing could be done, or not much could be done on that front. Now with the majority in parliament, probably this arrow, the third arrow, is finally going to be fired. And that is going to be good for the Japanese economy. It may finally boost the economy and Japanese stocks also. And there have been rumors of helicopter money in Japan, particularly after a meeting between Ben Bernanke, the former Fed chairman, and the Japanese Prime Minister Shinzo Abe. Now, helicopter money is something which I would define as an extreme form of monetary stimulus, which may involve the central bank printing money to directly fund government spending or to give cash to people. So we don't know whether helicopter money policy is going to be included in the stimulus package or not. But in any case, we expect a large monetary and fiscal stimulus in Japan. They're already talking about a package exceeding $10 trillion, and that is going to boost Japanese stocks and bring down the value of the yen. So maybe it is time to look at some of Japanese ETFs.
Our own former Fed chairman, Ben Bernanke, was nicknamed Helicopter Ben.
Yes, yeah, he
for
was.
similar theories that he professed earlier on in his career.
Exactly.
So
that
right.
is why the meeting sparked those rumors.
Yeah. Well, now you've got the two examples. First one is the Wisdom Tree Japan Hedged ETF, right?
Yes, the ticker is DXJ. It is the most popular currency hedged Japan ETF. Now, when we are expecting the yen's value to come down, it is preferable to invest in currency hedged Japan ETFs. So that's why the two ETFs that we are talking about today are both currency hedged. Expense ratio is 48 basis points. Pays a decent dividend yield of 2.3%. And Toyota Motors, Japan Tobacco, Mitsubishi, well-known Japanese companies are among its top holdings.
All right, and the second example is a Wisdom Tree ETF as well.
Yes, this is the ticker is DXJR. It provides currency hedged exposure to Japanese real estate sector. Now, I like this ETF in particular because the Bank of Japan has been buying a lot of REITs, Japanese REITs. And Japanese REITs are very popular with Japanese investors because they still pay an attractive dividend yield, whereas Japanese government bonds mostly have negative yield as of now. And if they step up a stimulus, then these REITs, the real estate sector, may benefit more. This is a ZAX Rank 2 by ranked ETF, same expense ratio, and has a dividend yield of 2.2%.
All right, do you own either one?
No, I don't.
All right, if you're out looking for more ETF information, then you should check out the ETF section of Zax.com. All you need to do is get to the home page and use the Funds tab in the top toolbar, and it'll take you to that section. Meantime, with Nina, I'm Terry Ruffalo.